Indeed, it's an interesting topic. We've been positive on India for some time, and despite the recent headwinds, we still think it provides a good opportunity over the medium term. Sentiment around the sanitary situation has deteriorated, and it's worth monitoring closely. However, there are still plenty of very positive forces in India which I think will dominate over the medium term. For instance, India is one of the emerging market countries with the highest vaccination rollout. The central bank has also accumulated significant FX reserves over the last year. This therefore leaves the central bank with plenty of ammunition and also gives them credibility. Macroeconomically speaking, our growth nowcaster still indicates a very favourable context for the country despite a mild decrease in their diffusion indices. It's also one of the rare emerging market countries where the risk of inflation seems to remain muted for now, which will leave room for the central bank to manoeuvre. The Indian rupee came under pressure in late April as stocks were triggered. We also had quite a few local holidays at the time, which did not help liquidity. With the markets a lot cleaner now, and a lot of negative news in the price, we think the Indian rupee will stabilise and continue to reverse course. The Indian rupee has benefited from the large equity inflows year to date, and we think these will continue over time, given we're in an environment which remains supportive for growth-orientated assets more broadly. Despite the recent move higher in volatility, I think we'll quickly return to a high carry, low vol regime, which makes the long Indian rupee short Taiwan dollar trade particularly attractive over the medium term. In a similar fashion to what we've just discussed in the foreign exchange market, the Nifty also came under pressure. I think Indian equities offer an attractive entry level, especially against their peers, as a catch-up should follow the recent weakness we've observed. Indian stocks are still below their recent peak and now lag developed market stocks by approximately 6% year to date. As valuations become rich and exuberant somehow in the developed markets, there is a good opportunity for emerging markets to outperform, and especially India, given the elements mentioned earlier. To summarise our view, we believe the recent price action in India is an interesting opportunity because a lot of the negative news are already being discounted by investors, while the macro context is supportive and expected carry remains elevated.